Hello, everybody, and welcome to VRIC Media, the most trusted voice in junior mining. We have wrapped up the Vancouver Resource Investment Conference. It happened January 19th and 20th in Vancouver. An incredible lineup of speakers, panels, and much more. That content will be coming to you on this channel shortly. I hope you will enjoy it, but for now, of course, we're bringing the VRIC to you. And I'm very excited to welcome today's guest, a Wall Street veteran and author of Confessions of a Wall Street Whiz Kid. He is also the founder of Grandich and Company. It's Peter Grandich. Great to have you on the channel.
Good to be back with you, Jesse.
So at the VRIC this year, one of the main themes that kept coming up was the disconnect in prices between gold itself and gold mining stocks. Even majors like Barrick and Newmont seem to be bargains right now. Is there something the market is missing? Are these stocks fairly valued at this point? Is this a massive opportunity? And what do you think it would take to close the valuation gap between the metal and the mining stocks?
Well, I would say disconnect is an understatement to begin with, given the fact that if we went back at any point in time and said to any of us that were investing back then and not playing in the kindergarten, we were told that gold is $2,800, and you would have talked to me on any of the majors, I would have said, oh my God, they must be worth X amount more than they are. And they're not. Part of that is because they had expenses go up, and they've made up for sins 10 or 15 years ago that a lot of restructuring took time and got better. The other factor is it's just it's my biggest argument, but it's a contrarian argument that the actual mining industry, especially on the junior end, has less eyes and interest now than it did 20 or 30 years ago, for a variety of reasons, including crypto. I would say that crypto's done more to impact the junior resource market on a negative factor than any other single factor, but it's one of several that's impacted. Having said that, the majors are now at a just an almost a cash machine. Their free cash flow, which we're going to see in a couple weeks as they report their fourth quarters, should be on average at records and numbers that maybe 5 or 10 years ago we didn't think was possible. And because of that, and because of the years of neglect overall on exploring for new metals around the world, which has shrunk because of a lot of reasons, it's not as you can't spin a globe anymore and go like this as you could have 20 or 30 years and go say, yeah, let's go look in there. You just can't for a variety of reasons. But having said all that, I think it's one of the reasons why in recent days we saw even talks that Glencore and Rio were exploring a way of merging because it's that much more challenging and there's that much more overall demand. So the majors are in a really, really good situation. Uh, Even if they almost doubled, they would not make up for the price of gold when they were last at such a valuation. So I would say from the majors, I don't want to say anything's a slam dunk, but they have the least challenge among them. Now, as you go down the food chain and you go down to where you and I live, or we speak a lot about in the junior market, it still remains a big challenge. One is because of the amount of companies that are interested are just not on people's minds and ideas. It's far more challenging for the juniors, not only from financing and all, but overall, to answer the original question is, yeah, they're very, very compelling, especially the majors.
Let's talk about the junior mining sector as a whole, because as you mentioned, there's not much market participation at the moment. Sentiment appears to be fairly low. I want to touch on a tweet you made. You said, gold going to 3,000 plus, check. Major gold producer record free cash flow, check. M&A stirring among the big boys, check. Worst ever bearish sentiment on junior resource stocks in the modern era, check. And Grandich has bet the ranch, the kitchen sink, and his marriage on junior resource stocks. And you put three checks but beside that one. Talk to us about the opportunity you're seeing in the sector right now and why you're so confident that perhaps we're on the precipice of a bull run in that market.
To a man that's very candid, and one of the many reasons I like speaking to you, I'm going to be extremely candid in my first response. And that is they're either at the single biggest buying opportunity in my 40-year career, or somebody rang a bell and the door closed and I didn't see it or hear it, and I'm on the wrong side of the door. in order to believe even half the belief of what the Western world speaks about of how much more demand there's going to be and needs for metals for a variety of reasons, whether it's half true, electrification, AI, just growth that you're seeing in the emerging markets and all, there is not a ready supply of metals to meet that demand for decade, if not decades, plural, of lesser and lesser exploration. And because of that, uh, and the necessity to fulfill that, at the end of the day, majors will look to juniors before they start to say, well, let's just start spending a whole lot of money building up our own uh, green fields exploration, which can run a major when it's all said and done between the gains and losses, anywhere from 150 to 250, maybe even $300 an ounce to find and develop an ounce of gold. When there's ready-made projects, either advanced state exploration, pre-development, development, or maybe already producing, still selling for as little as $10 to $20 of gold in the ground and no more than 40 or 50. So I am betting on and speculating is another word for gambling because they're one and the same, and you got to be prepared to lose part of all your capital. I'm gambling that we're going to see a marked, heightened increase in M&A starting at the high level, which we've already seen, and then very quickly move down as their value of their shares become good currencies into the junior market, both through strategic relationships and outright acquisition. And that's why I have such a large sum and bet myself and enthusiasm at a time when you clearly know it's very hard to find anybody looking at this sector that hasn't been involved the last 10 or 20 years. I know you spoke in another segment about how the show that you recently completed had good attendance, but that hasn't shown up massively across the board because one of the things that has to happen is the crypto market has to calm down. Now, I think Bitcoin is a big problem. I think that's a big Ponzi scheme. But I think crypto itself is here to stay. But I just believe it needs to calm down to a point where it's not a get rich or retirement story for every person that's 29 years or younger now. And I think as that comes about and a little money more filters into the junior market, we'll get the supply versus demand need that we have, and we'll see an incredible rally, which I suspect will be sometime in 2025. I'm not going to be able to say in 2026, oh, we got to wait another year. If I'm right, it's happening this year.
Now, you mentioned crypto. I think another thing detracting from the junior mining sector, of course, is the Nvidias, the Teslas, the Microsofts, the Mag 7. Do you think it's also going to take a correction in that market, in the broad market, to maybe bring more interest into the metals and mining sector? We hear a lot about this rotation of capital that's going to be going from overvalued tech into real assets in the form of commodities. Can commodities as a whole, can these junior miners rip at the same time that the broad market, the S&P, the Nasdaq, etc., is ripping, or do you think we'll need to see a correction there for a bull market to truly start?
Well, I think the correction is at hand. I think minimally the stock market has begun, as you and I speak today, the correction minimally that it needed, if not the eventual top to a bull market, which you can't even begin to say yet. But one of the things that's important is the market has been priced, meaning the general equity market, to perfection. Even the bulls will argue PEs are quite high, earnings expectations are quite high, and some of that's starting to come in now. So if you start to see that, and the Wall Street community has to start lowering overall earnings expectations, there is going to be one group where earnings is going to be expanding, and that's going to be the major producers. And that will cause, I think, that money, they're not going to run to juniors, they're going to run to majors, but then that will be the trickle down effect that will impact the junior market. I will say this, you don't want a crash or a near crash in the general equity market because no one's going to do this, Jesse. Oh my God, how much is IBM and Nvidia down? My long bond is down. How much? Okay, buy me a bunch of junior resource stocks. It's not that doesn't happen. So you don't want to crash. You don't want a quick decline because you want a chance for that money to roll over from one group to another.
Yeah, very well said. I want to hone in on copper specifically. I know that's a metal you're very bullish on. I get different opinions. We spoke earlier when you interviewed me for your show about the copper market, and I mentioned that I've spoken to people like Lobo Tigre who are extraordinarily bullish, others such as Lee Gehring and Adam Rosenzweig who think copper is not going to perform as well as people think it is, particularly because the energy transition, which they see as a big part of these forecasted demands that a lot of these companies put together, S&P Global being one of them, that's a big report that's often cited, is not going to play out as people think. Um, how do you expect copper to perform in 2025 and beyond?
Well, first of all, it was Lobo who I heard when uranium was under $20, and I had never really played it in my career as a manager, what have you, and got me interested. So I'm always interested to hear what he has to say, and I'll probably say that I more side with his view of the bullishness on copper. I think what's important to recognize is that copper has demonstrated that it has a really great floor, round four, maybe 385, maybe even 375. That's a long way from those of us who remember when $1 or $2 was a very viable price. Second thing you have to look at is there's no known ample supply sitting somewhere now with it above $4. Now, if the world collapses and no one does anything, sure, then there'll be an ample supply. The other issue that probably favors more of why I'm more on Lobel's side is that the cost or the ability to get large scale copper projects now, not only because of political stuff that may be problems and costs, is grade. Grade has dropped dramatically on copper. And therefore, there's going to need, at the end of the day, a higher price if it just stays the way it is, the typical slow growth that it's had, because miners are not going to go and spend $1 billion to go up some mine in South America, some mountain, when the grade is so much less. It's a third less than what it used to be 20 or 30 years ago. So I think all of that is very, very favorable. And I think the best of all worlds, and where I focus a lot of my own investing, is in juniors that have both copper and gold exposure in their pocket. I think that's a 1-2 punch. So I would say that I'm more bullish, and I think we'll work our way higher. I think it's going to be a challenge to get above 450 in the first half of the year, but I think we will be in the second. And I think as we get to 2026, it will be closer to 5 than we'll be to 4.
So we've touched on gold and copper. What other commodities are you watching at present that you think could present an opportunity? I know you've exited from uranium. When we spoke earlier, you said maybe you'd be looking at another entry point if you saw the equities drop far enough. Any thoughts on the energy sector, oil and gas, any other metals that you're currently watching at the moment?
Sure. If the uranium had another leg down and all those rocket ships turn into crash landings that we watch on the internet, I think I would be interested. That would probably only occur if the uranium price, I think, broke strongly below $70. I don't know whether that's going to happen. I really don't want it to see it happen because I have such good friends that I know that I follow that are long uranium, and I don't need to make an extra few bucks so they have to go through hell. But yeah, uranium is probably the best fundamental story that exists out there. And silver is still, I'll get the silver bug, send them emails, but still like kissing your sister compared to gold. And until it can get at least above 35, 36, I think it, remains a second class next to gold, but you got to own both of them. The metal that I think is coming around, that I think if there's going to be a spot play on it, so to speak, is zinc. And I have focused on that in particular because of that. And it's the type of thing that I don't think it's going to get like lithium did, but it's going to come out of left field, and all of a sudden people are going to go, what zinc? What is it used for? What do we need it for? But there's a lot of fundamental change there, and a very bullish supply demand scenarios building up. So I think zinc would be one of the other metals that I would look at. I think the thing that we don't look at, which a lot of us missed out on, are the agricultural commodities. I mean, some of these things have just, I mean, that's why I don't believe the 2 or 3% inflation that they keep telling us there. When you look at the charts of just about every agricultural commodity, they're double digit over the last 5 years, 10 years, each year. So I don't look at them, but that would be an area that I think if you know somebody that's very sophisticated and been successful, maybe an area to look at.
Yeah, I've been pounding the table over fertilizer stocks in particular, the majors have been so beaten down, and these things are trading at like, very low price to book, price to sales ratios below one, I believe some of them. And when you look at the profitability and the fact that I think we're going to see a commodity super cycle as a whole emerging, that could be a very bullish setup. Also, nobody's paying attention to them, which I think is kind of a good sign. Are there any specific stocks you could discuss in the mining industry that you're currently either invested in or watching? If you don't want to be specific with names, then perhaps areas of the junior mining or the mining space in particular that you think look attractive at the moment.
Okay, so I'm speaking my book, and in some of these, they're also blog sponsors. But in that copper gold theory of mine, my largest single holding is, I think, one of the best project-wise companies I've ever invested in, and one of the worst IR marketing companies I've ever invested in. And that's Arizona Metals. And I pray almost daily that they'll recognize that they need to do a much more better job on the marketing because they have such a phenomenal project. But the price of the stock now is so cheap that even if they stumble and fumble on the IR side, I think at the end of the day, projects went out because of the geology, not because of the marketing over the very long term. But even there, if they don't get their act together, they might not get as high as a price that we once thought could be. The other one that fits that criteria, where the company is a textbook case on how you should run a junior, and that's a company called North Isle Copper and Gold, located up in Vancouver Island, British Columbia. There, the CEO, the entire board has bought lots of stock, put their own money where their mouth is. Phenomenal marketing. You don't go a week without seeing them at some show, some conference, some interview being done somewhere, some marketing about their projects or copper and gold and all, and has a very increasing institutional interest. So I think that copper and gold argument is. And then there's an area play that I like particularly, which people don't talk about. Used to be almost every other month there was an area play in the junior market 20, 30 years ago. And that's Quebec and also Newfoundland. But in Quebec, I think tremendously. In fact, on my list and the companies that I own, I think three of them, two of them are a takeover this year, target, and within by the end of 2026, the third one. The two that I think that go this year is Amex Exploration and Radisson Mining. And then the third one is Northern Superior. And the reason is a company that was basically on the mat and had an almost 8 count on a 10 to be knocked out was IM Gold a few years ago. And they are the turnaround of the new millennium. They've now become a very, very good mining company. They've gotten a major mine turned around. And I think upon that more success, people seeing that, I think they become a takeover target. But I also believe they are going to need to make takeovers, and they're eyeing things in Quebec, of which the companies that I spoke of could be or an Agno Eagle or another party where, like an Amex Exploration, already has a 9.9% strategic partner, Eldorado Gold, which the stock is a lot lower now than what they even paid that stake for. And these are things that I think are just going to happen. And it's kind of like a watershed blocked right now. And there needs to be a beaver to come and move one of the logs, because one of these things go and the market wakes up to that. Suddenly everybody's going to look at that. And those are the companies that I think this year, Amex Exploration, Radisson Mining, and maybe later in 2026, but also will be an acquisition target, Northern Superior Resources, of which I all own. And all those three are also blog sponsors that sponsor my blog as well.
Yeah, I appreciate that disclaimer and also appreciate you being critical of Arizona metals
And
as
can I just
well.
add to that?
Yeah,
I say critical. I don't think they're being dishonest or anything. I don't want
of
anybody to
course.
misinterpret. I just
Yeah.
don't think they're as anywhere as effective as they could be. And it's a much smaller pie in our industry now, in the metals and mining industry. You talked about a conference, and it's good to hear that there were some younger people, but basically the industry was made up of no hair and gray hair. And you talked in our interview about how the industry itself is suffering, trying to get workers because it's all older people and all. And so I think you have to be extra proactive on the marketing side. And yet, if you go did a search on Google and you put their name in, there's only two names that are going to come up where you see people talking about it, myself and their single largest shareholder, Michael Gentili. And I think that's a disservice to shareholders. And as is someone that owns a lot, probably my followers and clients probably own maybe 15% or more of the outstanding shares. It's also a management that hasn't actually owned a lot themselves. So I really think they need to pick it up on the IR marketing, which I'm going to be hopeful that they recognize and do. But the project is worth so much more, in my opinion, than what the price of the stock is. Even if they stumble and fumble, I still think you can own the stock here.
Well, let's switch for a moment to the political realm because in several of our past interviews, you've mentioned the polarization in the US between followers of both parties, all of the issues in the country when it comes to the social fabric of society itself. And we talked about this before Trump was elected. This is the first time we've chatted about it post Trump being inaugurated. Do you think any of these problems get better under Trump, or is this still business as usual? Does it not matter who's in office at this point?
This only popped in my mind as you were answering the question, and I hope I don't fall on my face by starting this way. But I live in New Jersey at a point where we're just on the border that if you go any further south or west, people become Philadelphia fans. So for a lot of years, and I worked with them for 13 years, the New York Giants were the football team. And we were able to say to those Eagle fans, you guys stink. You never won the Super Bowl, yada, yada, yada. Now, in the last 10 years, we've gone into the pits. They won a Super Bowl and now playing for a second. And now they seem to be the one that can say all the words. It's kind of what happened here politically. For 4 years, we had a much different type of administration, and the groups that supported it were, let's just say, left and far left. And those on the right or far right were like the Eagles and the Giants. Now the switch has come. And in the very short term, uh, those people who were against the past and against them are really emboldened by the first few days of Trump's action. Two things you can say about Trump, okay? You can't deny. One, he's a doer. Not only does he say things, he follows through what he says. Now, you may not like it, and apparently some people hate it, and some people wish him dead because of it. But he's a doer. Don't take that away from that guy. He's not going to be like most other politicians when you go, man, he ended up doing nothing what he said or she said does. He's going to do those things. Now, two of those things changed to my list of 10 things that troubled America before him. He's clearly changed the immigration story. And he's clearly changing the woke and DEI story. Those are two concerns that you had to have in the past administration that were negative for the US, in my view. They're out of the picture. But the three main things that remain, and actually there's four, but the three I'll just touch on. One, he can't do anything about, and he may actually make it even worse, and that's our debt situation. Because it is so unbelievably bad how people don't recognize how much the United States is in debt. From a federal standpoint, we have 27 states that are in financial crises that can't balance budgets, have a lot of debt issues, corporations that have borrowed beyond their means and have to go back in and refinance now, and consumers that are just beyond. Two-thirds of Americans are working paycheck to paycheck. And that comes to my second issue, this retirement crisis that's ongoing and it's only going to get worse. There's not much he can do about it, especially since on the first one, it looks like he's going to spend even more, which he did in his first. Only two other presidents spent more percentage-wise on increasing the national debt in history, and those two either had two wars to deal with or major conflicts, which I don't expect Trump to be in. That's one thing he's not seeking to be in wars. He's looking to get out of them. So I think net net, as good as we feel good about some social and political stuff, if you're on a certain side, I think the financial side of it hasn't changed and could even get worse. And that'll overcome any of the great success. Now, if there's miracles and somehow they go the opposite way and they stop the deficits and they stop borrowing to the point where they actually balance a budget. Jesse, I don't understand why both sides don't solve it in a very simple manner. If you really want to achieve this, pass the constitutional amendment. We have to have a balanced budget. We haven't had one since Clinton. So, if you really want to do that, if you really mean it, which I don't think politicians want to do, but if you really mean it, that would be the solving. So the polarization just kind of switched, kind of apart. And I'm also concerned, as you know, when we talked earlier, when I interviewed you, and that is the BRICS are an important part of the equation on the geopolitical front, and are only going to become more important. And his actions in these early days are actually just making it a better marketing piece for those that believe in BRIC to turn to the other countries and say, listen, this is what the United States has done the last few years. First of all, they abandoned their allies when they left Afghanistan. They took sides in a war, froze the Russian money, and then took the assets of the income and gave it to the enemy. And now the new guy that's in charge is telling you, if you don't deal with me, I'm going to cut your knees off. You won't be able to walk. That's a calling card. Now, you're not going to see Brazil or Russia or even India, which, like you said in our interview, they're going to try to play both sides of the fence to see how this works out. But the bottom line is they're not going to get into a word battle with him, but their action's going to be in deeds. Listen, statistics came out. Less and less people in the world are trading with the US. It declines, okay? And the usage of the dollar is declining. It's down to it's approaching just 50% in the world. So I think the BRICS long term, I'm not one of these guys that say they're going to be rival them tomorrow or they're going to have their own currency tomorrow. But it's an issue that I think Trump actually is actually going to propel versus initially some people think, oh, how tough he is, he's going to stop them in their tracks.
Well, let's look out into the geopolitical realm for a moment because Trump has been making waves there as well. A lot of threats, threatening BRICS nations with a 100% tariff if they try to work outside the US dollar, talking about buying Greenland. I think Eric Trump and maybe even Trump himself, I don't recall, have been there to Denmark to talk to the politicians there about purchasing Greenland or coming to some kind of arrangement. He's talking about taking the Panama Canal. He's talking about making Canada the 51st state. It's kind of unending, and you don't know what's kind of making a deal and what's not. Fascinatingly, he recently tried to fly some illegal immigrants from Colombia back to the country. The Colombian president denied the plane entry and said, "We're not taking them." Trump said, "Well, we're tariffing you. We're doing this, this, and this." And immediately the president crumbled, and the Colombian president crumbled and was like, "No, no, no, I didn't mean that. Go ahead, send them our way." So interestingly, that kind of shows that Trump's threats actually work in that particular situation. It worked immediately. Is this just his playbook? How much do you think he will actually be able to influence these different countries he's kind of directing threats at? It seems they're all standing up and paying attention, interestingly, which shows that at least he's considered a powerful leader, and people have to consider that potentially he's not bluffing. What are your thoughts there? How much of an impact do you think he will have? Is this all part of the art of the deal, or are these real threats that he will follow through on, in your view?
It's part of the deal. That's what he's really good at. First of all, if he takes over Canada, I don't want to see the Vancouver Canucks as an American team. They have to somehow stay different. But other than that, I've always picked on them. All seriously, Canada's not coming to 51st state. First of all, I feel insulted. Canada was my home away for home for a lot of years. For 30 of my 40 years, I spent just about every month at least 2 or 3 days in Canada. Canada and Americans are the greatest allies. People forget that they're still the greatest trading partners. They're very similar. You don't notice too much different what side you're on the border. Okay. There's a lot of whole things in Canada. In fact, the greatest movie ever, which everybody maybe should watch now, is a movie called Canadian Bacon. And it really shows you really how America and Canada is really close and in common and all. I think it's a negotiation ploy there. I don't think he plans, and I don't think Canada wants to come to 51st state. I think Canadians want to stay Canadians, and they have their right to be. I don't think we would be happy if the Canadian leader, without this ever coming up, saying, hey, you know what, we want to make America. In fact, we're going to come and make you become part of Canada. First of all, we don't want your winters. That's the first thing. But how you take them and all. And I know you don't live there anymore, but seriously. So I don't think Canada, I think that's a negotiation play. And I think that will change if and when there's a change on the leadership and the party that's leading Canada. I think it can be more workable for the person that will potentially take over. Uh, I think the Panama Canal is just a joke. That's just, again, that's a notion play. I think if anyone was going to work, it'd be Greenland. But here's what I think is going to happen in Greenland. I think that Greenland will be smart enough and try to do more strategic deals with the United States and try to get more money out of Denmark at the same time. That if I'm them, I think that's what they're saying behind their closed doors. In terms of that Colombian thing, he didn't really change his tune, the guy. He said, well, listen, I'm going to send our own presidential plane. But Colombia is it's so much smaller compared to saying getting into a tariff war with Canada, China. Let me tell you this. And there's a lot of more economists out there, but I did study it over the years. You cannot show me anywhere where trade wars, where tariffs were enacted, became very beneficial over a long period of time. And I think I think he knows that too. I don't suspect tariffs are basically adding a tax to the country that's imposing, and I don't think the United States can afford any more additional taxes. So I think it's a blustering, it's a positioning, and it has a lot to do what he does in his first 100 days. It's early on, and people feel good to change, but if you start to see that kind of slow and not all these things are happening, or God forbid you get a black swan in the stock market and the market's not going up, it's going down. Uh, there are there are a lot of things that still need to be done in order for his traction to really gain strength and make wholesale changes, which I'm not expecting to happen.
I want to talk about the fact that 70% of global stock market allocation is currently in US companies, tremendously high. I've spoken to a few people who believe that that trend could eventually reverse and who see opportunity in emerging markets or non-US jurisdictions when it comes to the stock market. What are your thoughts there? Do you think it's time to be looking outside the US just as a contrarian at this point in time?
As a contrarian, it's a screaming situation. Now, I'm not telling anybody to do this. I'm not doing this. But on my old money management days, I'd be talking to sophisticated clients about being long emerging markets short the US market simultaneously. I think that gap will shrink over time. I am concerned about a part of the world, not so much where you live, but you're closer to it than me, and that's Western Europe. I think the EU is done as we knew it. I think Germany has flooded and sputtered and is no longer the driving engine that could. And with that, one or more of the countries in the EU are going to look to either restructure the way the deal is done or, in a sense, try to themselves separate themselves from the EU. So it's not an area in Western Europe that I would feel. I think, like you said, more of the emerging countries, especially in Asia. I think a country like Singapore is a very strong country that I would not, if life was different, I would even consider living in and what have you. So I do think we've come to the extreme of that. I don't think it's going to happen overnight, but I do think when you looked at surveys where I saw that managers had only 1, 2% exposure to European market and they had 70 something percent exposure to the US market, that's concerning.
Yeah, absolutely. Well, Peter, this has been a fantastic conversation. Greatly appreciate you coming on the show. Tell us about Peter Grandich and Company, your blog, your YouTube program, your X account, and anywhere else people can find you.
Well, anything to find out about me as a person can be found at petergreenwich.com as a blog. I do a YouTube channel where I interview people such as yourself and then blessed to be interviewed by you. But much of my work now is done on X, and I've learned to say X versus Twitter finally. But that's probably the best single place. It's where I communicate throughout the day and evening and weekends. And really is just a phenomenal way now to communicate. If you think about this, this is imagine when I was a newsletter writer. So I would have to get a newsletter right. Okay, have the girl type it up, bring it to the printer, get it typeset it, run it, gotta wait for it to dry, fold it, bring it back, stuff it in an envelope, put a stamp on it, and 2 to 3 days later, somebody learned what you thought. Now, in a matter of seconds, the world knows what you think. It's a phenomenal change in communication, especially in our little world of communicating about investments.
Great. Well, I'll put links to all of that, the blog, the YouTube program, as well as your X account in the description below. Always a pleasure, Peter. Thank you so much for coming on the show.
Thank you and God bless you, Jesse.